Hey everyone, welcome back to Corporate Decoder. Today we're diving into the annual report of a fascinating family of exchange-traded funds, or ETFs, and this one's a bit of a mixed bag. It's like opening a box of chocolates where some are delicious, and others, well, let's just say you might leave them for someone else. We're decoding the First Trust Exchange-Traded Funds annual report focusing on the year ending December 31, 2024, so we will see how First Trust did in the previous year. First up, we have the First Trust Dow Jones Select Microcap Index Fund, trading under the ticker symbol FDM, or as I like to think of it, finding decent microcaps. This fund focuses on small companies, the kind that might be the next big thing or might disappear tomorrow. So how did our microcap fund do? It returned a decent 12.73%, slightly outperforming its benchmark, the Russell 2000 index, which is also an index of smaller companies. That said, if you had a hypothetical $10,000 invested in it, you'd pay $64 to cover the fund's expenses. The best performing sector in the fund was financials and the worst was consumer discretionary, so a good sector picking and a bad one. Let's look at what the fund invested in. With largest holdings like Turning Point Brands, Vimeo, and a bunch of others, the fund is not overly concentrated in any one position. But how did another of First Trust's funds do? Let's swing over to the First Trust Morningstar Dividend Leaders Index Fund, or FDL for our ticker symbol friends. It has got the strategy of dividend leaders. This one's all about those juicy dividend payments. This dividend-focused fund returned 16.98%, underperforming the S&P 500, which is the broader market index that did about 25%. Not bad for a dividend, but it underperformed the index by a good bit. On $10,000, expenses were pretty low, only $47. The fund made the most with financials, so that's good for a dividend fund, but got drugged down by investments in the materials sector, which is not so good. Let's check the portfolio to see what's in it. The fund is heavily concentrated in the top 10 holdings like AbbVie, Verizon, Chevron, Pfizer, etc. Next fund, please. Now, the First Trust U.S. Equity Opportunities ETF, or FPX, with the strategy of IPOs and companies that recently went public. Did it find any winners? It actually performed pretty well, at 25.02% against the Russell 3000's 23.81%, so picking out the freshly minted stock picks worked out well. Total expenses on $10,000 was $63, nothing crazy. The industrials and information technology sectors really drove this fund's performance, so if you need exposure to those in IPO form, this is the fund for you. But what's in the portfolio? With largest holdings like Palantir and AppLovin, there is quite a bit of information technology concentrated in it. This might be a sign if you're bullish on tech IPOs. Now onto the First Trust NYSE Arca Biotechnology Index Fund, or FBT, and this one's going to focus on biotech firms. This fund returned only 5.76% during the period, underperforming the S&P Composite 1500 Healthcare Index, which returned 2.81%. And just like all the others, you pay roughly $56 for every $10K invested. The best return contributor was pharmaceuticals, while the worst contributor was the life sciences tools and services subindustry. You might think this fund is diversified, but let's take a peek. Look at that, the fund's top 10 holdings make up 38.6% of the fund and are highly concentrated, making this a pure play fund for a specific space in the healthcare industry. A lot of these also don't make any profit and only have potential, so be careful. For all you internet lovers out there, let's explore the First Trust Dow Jones Internet Index Fund, also known as FDN. This fund had a return of 30.52%, but it underperformed its benchmark, so I'm not so sure it was a good picking. But it did outperform the S&P 500's return for the same period at 25%, and the annual cost for 10K is only $56, so it's a pretty cheap fund. Information technology had the greatest allocation in the fund, so tech is up there. The worst performer here was healthcare, and a lot of that comes from being too diversified. Largest holdings in this fund are unsurprisingly in Amazon, Meta, and Netflix, which are some of the stalwarts and giants. Next, we are going to look into the First Trust Capital Strength ETF, or FTCS, where capital strength is the main strategy. This fund returned 11.21% during the year of 2024, underperforming its benchmark, the S&P 500 index, so passive index investing did better. But if you like the capital strength strategy, it will cost you $55 a year on a 10K investment. The largest sector was the industrial sector, but the most contributions came from the financial sector. Let's see what exactly this capital strength is. Top holdings are names like Walmart, Visa, and Cisco, which are strong names, but its holdings are pretty widely distributed as well. Switching gears, let's check out the First Trust Value Line Dividend Index Fund, also known as FVD. The fund had a return of 10% but underperformed against the S&P 500 index that had 25.02%, so not so good for this one. At least it's not that expensive at $64 per 10K invested. Industrials had the highest allocation by weight and most of it came from financials. Let's dive into the holdings. Top holdings are Toyota, Honda, and Starbucks. This is an interesting fund and mix of companies if you are looking for income from these stable names. The last one is the First Trust Growth Strength ETF, or FTGS, and this one is trying to pick out growth names with strength. Returning 25.02% with $63 on 10K, this one was fine, in line with the S&P 500. The great asset allocations were also positive contributors, so that's a job well done. Palantir, AppLovin, and Carrier Global make up a good portion of its holdings, with almost 7% in Palantir. So what's the verdict on First Trust Exchange Traded Fund? Well, it's a mixed bag as we saw from the numbers. Each one had strengths and weaknesses this past year. The IPO and tech-focused FPX and growth strength ETFs had great returns, while the dividend focus group was so-so. Across the entire family, net assets have had large dispersion, ranging from just $1 million FTIF to over $6 billion FDN. If that means anything, is that certain fund themes have taken off more than others, giving a clear indicator. What's my take on the First Trust ETFs? We have to recognize that past performance can't always predict future performance. Despite the high fees, the company has shown to deliver similar results, and there were a few winners sprinkled in. What's most important is their selection criteria match what you are looking for. Thanks for tuning in for another Corporate Decoder. Be sure to let me know in the comments which company filings you want me to decode next. And as always, hit that like button and subscribe for more financial deep dives.